It's about that time of day again here, boys and girls. Newsletter time. Joseph James, School of Trade, sidewaysmarkets.com for your nightly newsletter for October 30th. Is it really already the 30th day of October? Boy, oh boy, we get a Thursday evening edition of our nightly newsletter in store for you guys. A jam-packed newsletter on the horizon for us tonight. We only got one more day left in this month. We got end of the month volatility. We got Halloween right around the corner. We got a Friday, last day of the week, last day of the month. We've got a ton to talk about today on tonight's newsletter. We're getting ready for volatile trading tomorrow. Got about a half day tomorrow on Friday, and then very excited to get into the month of November, and we're going to talk about why in just a few moments. Before we go into our charts here for today, I want to remind you guys, make sure you're watching this video over on our trading blog at sidewaysmarkets.com. If you're not watching the video on sidewaysmarkets.com, if you're watching this on a YouTube page somewhere, there should be a link right below the video in the description, and that'll take you right over here to Sideways Markets. 3 reasons why you need to get over here to the blog tonight. Reason number 1, you can download all of my charts. I've got some special bonus charts in store for you guys and gals tonight. You can download all those charts by clicking the link right below the video here this evening. Second thing here, upper left-hand corner, I have a free pass for you to come out and join me in my trade room. If you're not a member of School of Trade and you're curious, how do we use these charts every day? What does our trading strategies look like? What does it feel like to be inside of our trade room? What does it mean to be a member and attend our live trade room, right? The very best live trade room on the planet. The longest running live trade room on the planet. Well, I've got a free pass for you guys. Come out and join us. Third thing, that's right, there were 3 reasons. Lower left-hand corner, just above my ugly mug. Find my ugly mug, look right above it. You'll see a spot for your name and your email address to register for our nightly newsletter mailing list. Now you don't have to worry about when is the blog going to be updated, when will the YouTube video go up. Now you'll get an email from me right when the newsletter posts. So 3 things here today over on our blog. 1, download today's charts right below the video. Grab your free pass, upper left-hand corner. And of course, don't forget, find my ugly mug and register for our nightly newsletter. Now, if you register for the newsletter or if you grab a free pass, I am going to send you an email to verify this is the real email address and that you are not a robot. So please make sure to check that email after you register, all right? And don't forget, check your junk mail, your spam mail, stuff like that, right? It might be stuck in there somewhere, okay? Helmets on, seatbelts fastened. We have an exciting newsletter in store for you guys and gals here today for the 30th day of October. First of all, starting here with the Rusty, right? Good old, one of my favorite stock index futures, the mini Russell futures. Now, Russell still looking mighty overbought. Boy, we had a nice, easy sell last night, right? Coming off the highs. You can't see it much on this chart, right? But you can see, though, went up, came off that high. That actually is a pretty significant move off that high. It was tradable, and it was easy to profit from it, but it happened overnight. Asia, London. By the time we got into the U.S., we were buying it on the way back up. We found some reversals firing off the lows, and we were able to buy it all the way back up. We made quite a bit more money buying it back up as the Russell responded positively to today's GDP report. Now, depending on which analyst you talk to, some people are on the bearish side, some people are on the bullish side, but for the most part, though, the markets reacted positively to today's GDP report at 8:30 a.m. Painted a very rosy picture for the 3rd quarter of the year and gave us some confidence now going into the end of the year. So the Russell, all the way at the highs of this range right now, you can see we've got a trend line up here. You can see we have 2 different sell zones. And the big thing is, look at how steep that slope of these moving averages are. I mean, this thing basically just took off to the upside here as soon as it, right, pretty much reversed around that 1070 area. So we are in a place right now where I have a trend that is bullish. You can see the indicator is green in the upper left-hand corner. Trend is bullish, but clearly we can see this is probably not the best place to be a buyer right now. Long term. Long term is the key word there. So if I'm bullish right now, what do I need? Well, we know we have those 3 steps to success. What's my trend? Trend is bullish. Where do I want to buy in a bullish trend? At a buy setup. I have a buy setup down here at 1098.3, another one at 1063.9. So that's a ways away, right? We got quite a ways to go before we get down to that 1098 again, right? So long-term buyers on the Russell definitely have a difficult time getting long right now, because if you're long-term buying, you do not want to be doing it at these highs. Let's find some better options. But as you can see on this chart, though, be careful blindly buying right now. We're up in the Astros, right? We're kind of in the among the stars here right now. We're so high up here, right? Okay. So what I'll do now is we'll go down to the faster time frame. And the faster time frame, as you'll see here, right? Russell definitely. Now this was a short from last night, right? So we talked about that last night, right? Coming off the high here, we had the short going lower, but then this ended up reversing, and then we had that nice buy all the way back up. A lot of money to be made on the Russell today going long after that news report came out at 8:30 this morning. But this Russell's looking a lot like an astronaut right now. We haven't got a deep pullback in a while. We're still well above that key level of support at 1120. So we reacted positively to the GDP, but we can't buy these highs. So if I'm a buyer right now on the Russell, this does not really get me excited about buying right now, right? I know I have an uptrend. I can see I've got double green. I'm locked and loaded here to be a buyer, but I don't want to just buy the highs. I don't want to buy at a premium price. I want to wait for price to come down a little bit, right? So I can buy it down here. So I've got buy zones here set up at 1128.7, 1120, 1111.8, right? These are really easy to see. The hard part is staying patient for them right now. Now, when you look at the next chart, this next chart makes me laugh a little bit because, I mean, this thing literally is in the stratosphere right now. There's not, now, if you watch charts for a living, if you've watched charts for over half your life like I have, you begin to see things that stand out, right? The normal price action that we normally get after a big move higher like this, we're typically going to get a pullback a little bit deeper. We never got that deep pullback. Now, I'm sure some of you are saying, well, Joe, if you didn't get the deep pullback, that tells you how strong this market is. Oh, and you're right? I'm definitely not going to deny that. And if you look down at the bottom of the chart, we have volume that confirmed that move, right? Volume was higher between these two highs. So we clearly have volume confirming that move. But again, the fact that we never got a chance to really pull back here, we never got into, right, that deep pullback, which is what we needed after those 2 days in a row of just straight up, right, like we saw last week. So we're looking at this going, okay, I understand I'm bullish, but when I remind myself about that 64 anchor, this one right here, right, when I start looking at this, I get a little bit woozy, right, up in the stratosphere here, right? We start to get a little worried about being too aggressive at these highs. And that's really easy to do, right? It's really easy to be aggressive when you see these things jumping like this. So the Russell, in my opinion, is just floundering around up here at the highs, okay, after this somewhat bullish GDP report. I'm wondering, will this last for tomorrow? Bottom line is, if you're a buyer right now, you've got to wait here, right? I've got 45s for a buy, 37s for a buy, 28.7 for a buy, 11.8 for a buy, 11.20, right? You can easily see them, okay? As long as you can see the color green and you understand numbers, right? You can understand where we're going to be buying here. I'm going to be watching closely here to see if we get a double top here. And you know what I'm looking for, right? I'm looking for a higher high in price and a lower high on the indicator. So watch that volume closely here, overnight and early tomorrow morning. Don't be surprised if we come in here tomorrow and we're pushing down to that 35 area, all right? Again, there is no doubt in my mind that we are bullish right now, and we will continue to be a buyer here. But the fact that we've been floundering around here and the way that we did not pull back after that, being all the way at the highs in that range and that 64 anchor, it just gives me a little bit of a reason to be careful right now. I'll be trading half size tomorrow on the buys and full size tomorrow on the sells. All right, guys, looking good on the Russell. We move from the mighty Russell to that funny yellow metal. Now, here's something we don't see very often in a day trader's newsletter, right? That's right, I'm a day trader. We've got a weekly chart here. Here's a gold weekly chart. And if you turn on the television these days, if you look in the news media, right, don't even go over to Bloomberg or CNBC.com, you hear everybody talking about how low will it go, how low will it go, right, about the gold. What they really should be talking about is how high will it go, as in the U.S. dollar. The U.S. dollar is what's responsible for this gold pushing lower. And I think it's amazing when you look back in history and you think about the significance of today. What happened today? Today, the Federal Reserve Bank finished off their quantitative easing. Basically now, we've completed the entire stimulus plan that Mr. Helicopter Ben Bernanke put into place to, right, get our economy back on track. I remember 2011, 2012, when gold was jumping up. And of course, we made a killing on it buying gold in 2012. Why? Because they were printing more money. Now, everyone is so surprised why gold is right back to where it came from. Newsflash, this is supposed to be happening right now, right? This is supposed to be happening. When they stop printing more money, the need for gold as an inflation hedge goes away. So this is perfectly natural. You can see we have a triple bottom potential. We already have a double bottom here at these major levels of support, right? Right around the 1280 to 1285 area. We have a double bottom already and then possibly a triple bottom coming here later on this week. Now, I've gone out and projected another level below us at 1019.5. So keep an eye on that level as we move below this 1170. Now, members, if you recall, there is a specific extension level that I have designated as a rational market. That level is right here at 1170. Below 1170, this move becomes irrational. So just watch for price to get below this and then a quick reversal right back where we came from. Be aware there's going to be a bunch of sell stops in and around this area here, right? So what's going to happen is everyone who was long from a few years ago, they'll be taking themselves out of those longs with a sell. That will push price below, but I don't think it'll stay there very long, not the first time, right? The first time it goes below that low, it will get gobbled up by those bargain hunters because it will only be a bunch of stops being run below it, and you'll see it jump right back up, right? I thought this was an interesting chart to look at, though. If you're wondering, okay, well, is this low significant? It definitely is. We have this low here at 1285. It's a double bottom, and so we are going to be dealing with some significant support. And if it slips below that support level, get ready for those sell stops to kick in and get ready for price to jump lower. But that should be reversed back up in no time at all. Now, let's move forward here from the weekly here now. Let's go down to our 64. As you can see, we are just about even with that January 2014 low, right? We've nailed this gold to the wall this year, or at least for the last 6 months here, right? Selling short here on gold. So as we go lower, we got another target waiting for us at 1183, and then another one down here at 1149.5 on the gold. If we're looking to get short right now on gold, we got a little bit of a waiting game here. We get a little bit of a disconnect here. You can see grinding down the low of this bear channel. It's going to be very important that if you're a seller on gold right now, you stay patient right now. Long-term sellers on gold, I've got sell zones here at 1208.2, 1215.5, 1223.9, and 1226.9. As you can see, that's a ways away from where we are right now. All right, I've got that target that we hit from last night's newsletter, right? So last night we called this run down to that 98.8. Now we're here. One important thing you've got to remember, when you get your targets filled like this, now you want to wait for it to come all the way back up so you can sell it right back down again, right? Let it retrace off these lows before you go committing to another sell. We look at the 16 here on the gold, and we immediately begin seeing we have plenty of options here to be a seller. Now, short term, you see we just tested our sell zone here at 1202.9, right? So that clearly has already been tested. You can feel free to be selling short right now, but I would personally stay away from that. I'm watching this sell zone very closely here at 1208 to 1206. We have a reversal line here at 1208. We have a trigger zone at 1206 up to 1208.5. So that personally would be where I'm looking for that next selling opportunity on the gold. If it goes higher than that, we've got 1212, we've got 1215.5, and then I don't think we get here, but 1226.9 all the way up top. All right, guys? So stay patient on this right now. Again, you've got the green light to sell short right now, but again, I think you're going to get a lot more value for your risk, right, if you wait for price to come off that low. Just a little bit more. Now, sticking to that weekly chart here, right? We've been talking about the dollar strength, right? Talking about how this strong U.S. dollar, now that we know that the quantitative easing is over with. We heard last week that the Federal Reserve Bank has slightly shifted their wording, right? Now they're not as dovish. And everybody knows that term, right? A dove is somebody who wants low interest rates. A hawk, and I always think of it this way, right? Hawk, you've got that letter H for higher, right? Higher rates. A dove is somebody who wants lower rates. Okay, so when you hear all about all the Fed speakers and about which one was a hawk and which one was a dove, right? Bernanke was the dove of all doves, right? Before him was Greenspan. They were all very dovish. Now, we heard not I wouldn't say hawkish statement yesterday, but we heard from the Fed yesterday afternoon, we heard not as dovish, right? So basically we read between the lines and we start to think, okay, right? We're starting to get into that period now where we're going to start unraveling the stimulus. We finished off the QE, and now we open the door for rates to be lower, right? To be increased. That's going to continue to push that dollar higher, right? The strength of that dollar pushing gold lower, the strength of that dollar pushing crude lower. And just like gold, crude has a big, big level of support that we're sitting here right now on the weekly chart. Now, they're anticipating, from what I heard today, yesterday, and just reading all the news rags, we know that $70 a barrel, right? That is where, who was it today? I can't recall the country that came out today, but we've heard from all these oil producing nations, and they've basically said that they have budgeted between the $100 a barrel and the $70 a barrel range, and they believe $70 a barrel is going to be our bottom. Whether or not that comes true or not, you can see how much we've got to go. We've got $10 more to go lower here on crude, but we're bouncing right off of this major, and I say major, this is a weekly chart, guys, right? This is no slouch of a chart. We're all the way down at those lows. You would assume there's going to be some bargain hunters down here, right? You would assume there's going to be some buyers down here. You would also assume there's going to be some sell stops, right? That means you've got people who bought the lows before and their stops are going to get run down around here. So we will probably, if we don't go higher here, we'll probably end up getting to that 74.55 low relatively quickly, okay? So we'll be watching that very, very closely over the next few weeks, right, into the end of the year. I'll keep you guys posted on these weekly charts here for crude as we see them develop. Moving forward, though, we move to the 64 anchor here, and we see there are our 2014 lows Just like on gold, right? We're flirting with those lows from earlier on in the year. But we have this really nasty consolidation here right now. I mean, you can see just how easy it is to see that range, right? So consolidating range, it's been sloppy in the middle. So we look at this chart, we see we get a downtrend, a bearish trend. What do I want to do with that bearish trend? I'm going to sell the reversal line at 84. I'm going to sell the sell zone, the trigger zone at 86.60, 90.92. We've got this trend line overhead as well, right? So we get a lot of reasons to be still looking short right now. But if you're a long-term seller on crude, just like we said on the Russell, if you're a long-term buyer, if you're a long-term seller on crude, you really got to be patient right now. We don't want to sell at the low, especially if we're trying to hold some position for the next 90 days or so, right? So we need to be careful here on crude if we're a long-term seller. Moving forward from our 64 down to our 32, this was the only trade today that we didn't get completed. Well, the Russell reversed, and we knew why it reversed because the news was so bullish, right? So we kind of abandoned the short on the Russell at about 9 this morning once we saw that news come out and the personality quickly shifted back to the bull side. Crude oil, honestly, I had my money on 80.18 this morning. I had my money on 80.18 this morning here in our trade room. I really thought we were going to get down to at least that 80.18 today. We didn't get the full range today, right? We've been averaging about $2, okay, per day, and today, which of course is 200 ticks, right? It's about a 198 ATR on a daily chart right now. So we're loving life, obviously. We're loving the fact that we've got over right around $2 for an ATR every day right now. That is double, by the way, what we had less than 6 months ago, right? And it's still a little bit less than we had about a year and a half, 2 years ago. So we're getting back to those big ranges on crude, but we thought we had this thing pegged today. We thought we had this thing pegged. Down to 80.18, it would have been exactly $2. It was actually 80.05 was the $2 move down. And boy, were we excited about cashing that big paycheck. But as you can see, just simply haven't got there yet. So we're still on the path down to that low, right? Remember this from last week or last night, right? We talked about the fact we're coming off that high, right? I gave you guys that level on Tuesday night for Wednesday. Talked about it last night for today. So we're right on track here going lower. But here is the problem. Mama says don't fiddle in that middle, Jay. Don't fiddle in that middle. This is undoubtedly going to be the sloppiest area on this chart. It's right in the middle. We get that big round number, 81. It's going to be a challenging area. What I like to do is I like to wait to sell at the high and hold it all the way down like we're doing right now. I'm not trying to re-enter in the middle of that range because it's going to be real sloppy. The reason why it's sloppy is because, remember, what is resistance? Resistance is where sellers react. What is support? The exact opposite, right? Support is where buyers react. Well, what happens when there's no resistance or no support? It feels like you're in a canoe, right, without an oar, right? You're back and forth and you can't really get going. Basically, this is like being a ship on the ocean without a rudder, being tossed around with whatever news event comes out next, right? Whatever top of the hour breakout happens next. It's very challenging in the middle, right? These markets don't work in a vacuum. They need somebody to overwhelm the buyers or the sellers to make the market move higher or lower. So we are definitely wedging here, but in a long-term downtrend. So look for the short side right now. My next target on crude is down there at 80.18. And then if we keep on going, I've got 79.04 and I got 77.92, right, just to get us started here to the downside. If we happen to go higher tomorrow, I will still continue to sell those highs, right? Long-term sell. If we go higher tomorrow, you can take a short-term buy. But again, remember, inside this range, I would say between 82 and 80.5, right, between 80.50 and 82, that's really a difficult area right now to be scalping, right, to be short-term trading. Okay, you want to hold it long-term, different story. Now, here is a very good example of how tough this is going to be right now, right? Look at this. They're all over the place. Now, we clearly have everything on the bear side, right? Everything's pretty much red except for that 64, right, which is what we call neutral bearish, right? It's a light red color on it. So it means long term is down, short term is up. So we look at this and we see, okay, if we're looking to get short right now, I want to get short at 81.80, 82.42. I'm going to sell 82.88 highs. I'm going to sell 83.09 highs, right? That's all very easy, right? That's all very easy. But you notice this is why we most likely stalled out right in the middle of that wedge, right? So we look at this price wedge and we say, man, what happened in here? Why did this price just stall out right in here? Well, it's very easy to see when you go to a faster time frame. You can see we stalled out because if you're a buyer right now, right, this now pulled back into your buy zone. Now, a buy zone for a seller like me is nothing more than a profit target. So we knew we had the target at 81.16. That's why I said when we began, my exact words were, we got all the markets to make us money today, except the crude didn't finish the job, right? We made a little bit on the way down, but now we're trying to finish that job down here at 80.18. Okay, so 80.18, there's that number again, 80.18. So remember, look out below here. We get below that 80.75, you should be able to get to that 80.18 pretty darn easily. Targets below us at 80.18, 79.44, 79.04, and then don't forget the low of that channel, guys. The low of that long-term channel will definitely be a good target for you as well, especially if it goes into next week and we can get finally below and keep going. All right, guys? That's my plan here for crude oil tomorrow. How about we wrap up with a little bit of news? So we're bearish but patient on the crude and the gold for tomorrow. We are bullish, but a little bit, again, on the Russell. The Russell's been floundering around at these highs. I don't trust it. Now, I'm going to wait for that proof in the price action tomorrow, right? But stay patient on that Russell. Boy, oh boy, happy Halloween. Tomorrow we have the last day of the week, the last day of the month, and hopefully, hopefully not, the last day to find your costume, right? You don't want to be stuck with the old Obama mask, right, tomorrow night, okay? Be safe out there this weekend, by the way, right? Be safe with the kids this weekend. Now, looking at the news here for tomorrow, we do not have to wait for tomorrow. We have news tonight at 7:30 p.m. and 8:30 p.m. One news event I've got from Japan. Another we have here from our good friends in Australia, right? So you're not going to have to wait very long here. You've got news, unemployment rate here in Japan at 7:30, and then an hour later, you'll hear from our good friends down in Australia with their PPI. We look at tomorrow morning in Europe. We got some big news tomorrow morning in Europe. We've got retail sales in Germany. I've got consumer goods in France. PPI in France, 6 o'clock CPI in Italia. We got the EU flash manufacturing at 6 a.m., unemployment at 6 a.m. Yeah, just a little bit, just a little touching of news in that London session. Now, that's all great if you live, right? If you live across the pond or you're in Asia, right? If you go west from LA, right, through the Pacific out to Japan, or if you go east from New York City, right, out to Europe, you guys have a fantastic jam-packed session for you. What I am worried about for us here, us poor saps in the US, is that we may spend all those bullets tomorrow morning before we get to our desks. So tomorrow morning, look at the ATR and make sure that we haven't already spent all those bullets. Because you know what happens quite oftentimes when there's big news in Asia, big news in London. What happens is we get to the US and crude's already moved $3 in the day, right? So we're looking at the ATR tomorrow morning, looking for big clues to see what type of trading strategy we should be using. If we come in tomorrow morning and there are very small ranges, right, we'll look for trend following. If we come in tomorrow morning and the ATR has been blown out of the water, right, if the ranges have already been expanded, we'll look for reversals, range bound scenario tomorrow. So U.S. traders, especially my students, don't forget, first thing tomorrow morning, we're going to be looking at that ATR. We go into the U.S. session here tomorrow, and we've got some major news in the U.S. session tomorrow too. I've got 8:30 personal income, 8:30 employment cost index, and we've got our good friends up to the north in Canada. We've got the GDP from Canada tomorrow morning at 8:30. So 8:30 news, we have two Red Star news events tomorrow at 8:30, one of which, whenever we see news from Canada, remember, Canada has one of the world's largest businesses exporting crude oil, right? Natural resources from Canada. So we know that the monthly GDP, the GDP update for tomorrow morning, be watching crude oil futures, be watching natural gas futures, right? Be watching commodity energy-based futures tomorrow morning, or stocks, right, that are energy-based companies. 9:45, we got Chicago PMI, and 9:55, we have consumer sentiment. Now, that should be the end of our day tomorrow. After we get through 9:55 news, what you're going to see is you're going to see prices move pretty well. We usually get that 10 to 10:30 time is usually pretty good on a Friday morning. But beware, after 10:30 comes and goes, we do typically see things slow down on a Friday morning. And as I always tell our students in the trade room, you've got to have a really good reason to be risking your hard-earned profit on a Friday after 11 a.m., right? Now, I wouldn't expect anything else out of China but a Friday night manufacturing news report. If it was any other country in the world besides China, I would say, oh yeah, right. But that makes perfect sense, doesn't it? We all know that. We all know that for a fact. So not sure what they're thinking about a 9 p.m. Eastern Time manufacturing on a Friday. I'm sure it has something to do, right, with the last day of the month, right? I'm sure it has something to do with this being the 31st of the month. Now, we also have daylight savings time on Saturday morning. Remember how I said last week we have that odd week? Is it a week, 2 weeks? I can't recall. Yeah, it's a week, right? Where the European, where the Euros, they've pushed their clocks back last week. Now we're going to push our clocks back here in the U.S. The Saturday morning after Halloween. Ugh. Talk about hangover, man. Right? You wake up, a few too many glasses of aged grape. Right, a few too many Butterfinger bars. Right, I got candy coming out of my you-know-where. I still got glitter on places I didn't even know from the party last night, and they take an hour from me. Come on. Actually, no, they actually give us an hour. Right, fall back. Nope, you lose an hour. Yep. So you fall back, spring forward. Right, so we fall back on Saturday morning. So set those clocks back. As long as you get those computer clocks set, that's the most important thing, right? So make sure to set your computer clock back an hour. That way your charting software is updated. I'm sure next Monday will be just a whole bunch of fun out there in the markets as traders come in and forget that it's daylight savings time, all right? Or it's not daylight savings time, right? It goes back to standard time now. Whatever. Bottom line is they're robbing us of an hour of sleep, right, and 60 minutes of sunshine at the end of the day starting on Saturday. So guys and gals, have yourself a fantastic Friday, end of the week, end of the month, Halloween. Try to make the best out of the daylight savings time shift this weekend. And before I let you guys go, don't forget to head over here to sidewaysmarkets.com, grab your free pass, join the newsletter, download the charts. And if you happen to wander over here to SchoolOfTrade.com, don't forget, we offer a free trial that's better than anyone in the business. Our free trial, you'll learn more during that trial than any other paid website on the planet. We offer 3 levels of membership: beginner, intermediate, and advanced. We have every type of trader covered, whether you're brand new or you're a grizzled veteran trader. And guys, we got someone standing by here 24 hours a day, 7 days a week, 365 a year to answer your questions. Guys, my name is Joseph. Thank you so much for stopping by our newsletter here this evening. Don't forget to join the newsletter mailing list, subscribe to our YouTube page, and share this information with a friend. Now, get out of here and eat some candy for me. Get those kids ready for Halloween and be safe out there. Be well, be happy, and be profitable. We'll see you guys on Monday. No newsletter on Friday. Have a great end of the month, and we'll see you guys tomorrow morning in our trade room. Adios, amigos. Bye for now.